You did put out a trading statement today, June the 14th. On June the 4th, 10 days ago, you warned of a loss per share, but positive headline earnings per share. And of course, those numbers are positive today. So just explain what seems to be quite a discrepancy.
Well, I think, what we're looking at in the loss per share are the basic earnings per share. That obviously takes into account about a 590 million rand impairment in assets in one of our subsidiaries, Megacube, and also about a 60 million rand loss on sale of assets during the last financial year when we started to sell assets quite aggressively out of that unit. But what it does demonstrate is that those assets are now valued in our books at what we believe to be market value, and we'll continue to obviously monetize those assets in the market going forward.
So largely an accounting loss rather than an operational loss.
That's correct, and I think if you strip out the impact of a Megacube, you will see that the profitability or even the operating profit of the company rose by substantially more than the percentage you mentioned just now. Sounds
like you've done quite a lot to the company, quite a lot of activity, impairment, assets being moved around, revenue up 5%, headline earnings up 35% to 21.7%. But what's behind that, and what have you actually been doing with the company?
Well, I think, we inherited a company, both myself and the CFO, when we joined some 4.5 years ago, which was, certainly as far as the core, and we've subsequently found out, wasn't really a good business model. And that's the old Skurrige's and Opencast Mining, rebranded as Megacube 2 years ago. And what we've had to do now is decisively deal with that. We've tried various ways of dealing with it over the past, repricing the contracts that it entered into, limiting the amount of debt that that company was exposed to, changing management. But I think ultimately it comes down to dealing with it on a decisive basis, using the remaining assets, monetizing them, either redeploying them across the rest of the group, or using the proceeds to reinvest in capital in the remaining businesses. But what we have is a business now with 5 mining services businesses with very good 5-year track records.
Let's go through them, because some of them presumably do better than others at different times, and it's one of those things where if you've got some things performing, then your company's better off than if all the eggs in one basket. Mining services is one, exploration, drilling is another, crane hire, which not all companies would have in theirs, and coal mining in particular.
Yes, if we look at the sort of split of earnings, or certainly from an operating perspective, the bulk still comes from bulk earth moving, which is in 3 remaining entities. That's Benicon Mining, Jeff and CCT. And their track records have been good over the last sort of period. And, we see that still as the basis of this business. They are ostensibly exposed to the coal industry, which is quite a defensive sector, I think, still from an energy perspective. The exploration side of the business, certainly it's seen its boom times, it's seen its down times, but it's always been profitable. And now its exposure is more offshore than onshore. About 65% of its revenue being generated outside of SA, mostly in dollar-based currency. So we're starting to see even the benefit there of a slightly weaker rand-dollar exchange rate. Their exposure to commodities also helps tremendously, in that most of their external drilling is for gold exploration, whereas a lot of our earth moving in South Africa is on the coal side.
What about coal? What kind of coal is it? Who does it go to? Is it Eskom? Is it exported? Do you use the Richards Bay line?
Yes, a lot of it is exported, because one of our big clients is Anglo Thermal Coal. And what we have seen is that the capacity at Richards Bay, which was significantly increased a year or 18 months ago, lagged because of the Transnet freight rail's performance. Now, that's certainly grown over the last sort of period, and we're seeing that uptick starting to come. And now the producers are under pressure to supply the coal into that. And the first port of call for any producer, whether you're an Anglo or a mid-tier miner, is look at contract capacity.
You also had some costs in this year which will not be repeated, presumably. One of them was the BEE transaction, 10.8 million rand, and retrenchments, unfortunate, but 16 million rand there.
Yes. In terms of the BEE transaction, we embarked on a transaction early in the financial year. Unfortunately, we weren't successful, so we did incur some costs in that. But we were able to benefit from that by entering into a second transaction, which now became effective on 9 May this year. So I think those costs are well invested. There are some further phases to that, which will not be of the same sort of magnitude. But at the end of the day, the benefit one gains, I think, is huge.
What about your position as a mining company, but also as a company that is exposed to other miners? It's an unusual position, perhaps. So, on the one hand, you yourself do things, but you are also responding to other activity. If you look at, we've talked about the shares, the resource sector. Most of the sectors have been going up and down. Resources have gone up by more and down by more. There's been more volatility. And some of the days here, we've seen the gold stocks being the biggest gainers, and other days the biggest losers. Same for platinum.
I think, you know, one thing that can be said about the mining services industry is that we generally don't see the boom times. What we produce is either volumes or meters drilled. So that's priced. And so when our clients are seeing the boom times in the commodity sector, we're not really seeing that translate into new pricing. What we do see it translate into is additional volumes. But I think the same applies on the downside of that cycle, where we're a little bit more defensive, because if a client is about to bring a new project on stream or needs a little bit of additional capacity, and they're reluctant because of the visibility of the commodity sector to put more capital in, where do they come? They come to the mining contractor who possibly has some spare capacity to put into their operations.
I know you can't talk about the valuation of your own share, that's for investors to do, but you might have a comment on the sector as a whole. Abdul Davids earlier was saying how if you look at the valuations of the sector, industrials and financials are each up by 15% or 10%, whereas resources are down %. I think the period he used was a year. And others have also made the comment that resources shares are offering great value, and particularly an Anglo-American or a Billiton, where they've got a diverse range of minerals and there's going to be demand for it down the line.
I think there's absolutely no doubt, David. And you know, specifically in our case, what we have suffered from is the overhang of some of the legacy issues in this company. Now, having got to what I call the watershed of 31 March 2012, when we've dealt with ostensibly a business like Megacube, which was a business model that we just could not get to perform, it does put us in a better position going forward. And I think we will see, obviously earnings dependent, we will see a re-rating of our price to depict that in time to come. What's
your assessment of the global commodity cycle, if we could still talk of that, given the obsession with all the other things that are going on?
I think, you know, where we're exposed upfront is obviously in the exploration sector, and all our exploration outside of SA is exposed to gold. And I think it's an indication, and of course it's on the African continent, so I think it's an indication that, you know, we're still going to see probably good growth in that sector going forward. There's new jurisdictions that have been explored for gold, which traditionally weren't. What we're also seeing is that there's still investment even in a very tough economy, and I think that's one of the things that happens. But I think at the same time, you know, coal, energy, it's certainly going to continue to play a role. We're rich in coal in this region, not only in South Africa, but obviously in Botswana and Mozambique. And I think we're now starting to see some of those resources being exploited.
Final question on platinum, you haven't talked about that, but there is the Minister of Minerals and Energy talked about you know, we've got to look at what's going on there. We've got to perhaps make some kind of special deal for platinum, perhaps adjust the tax regime.
I think that's 100% correct, and you know, I think the latest sort of incidents in the market where, you know, mines are starting to close unprofitable shafts, or even mines for that matter, I think is an indication of that. We are not exposed to a large degree to the platinum sector, but we do have a bit of a foothold there. Fortunately, it's in the open cast environment, which tends to be the lower cost end of the producer scale. So I think we're still quite buoyant about, you know, being operating in platinum. But yes, it's a challenging sector.
That was Robin Berry, CEO of Sentula Mining.